So how do some of your clients now view Bitcoin, and have they really caught up to this idea of like how transformative it is? Like
Yeah.
basically it's really hard to steal your shit.
And look, if Bitcoin reaches its potential, then I'm not going to say I'm out of a job, but the investment aspect, the keeping ahead of inflation aspect, right, of the wealth management job will be severely reduced, severely curtailed. Financial advice and financial planning are likely to still remain relevant, although much of that may get automated. I won't go down that rabbit hole right now, but yeah, let's just say that, as you say, staying ahead of inflation in a fiat world is hard, and up to this point, a lot of people have been happy to pay someone like me to do it for them. I will say that we're still really early with respect to clients understanding what Bitcoin is. It's a tiny minority of my clients that understand how impactful, how how the foundation of finance could be shaken will be shaken if Bitcoin reaches its full potential. I think we're kind of in the digital gold stage right now. Oh yeah, this thing's not going to die. Okay, the government's probably not going to kill it. It's still crazy volatile, but I can see how it's a substitute for gold. So if I want to own hard money, then I want to own some gold and I want to own some Bitcoin. That's like, I think, where the average client of mine is. So suffice to say that we've started on the journey, but it's early days and there's quite a ways to go.
Interesting. And I always love asking about that, kind of specifically in that you can read all this information, right? All the different media sources or podcasts, but actually, like, what do people actually think? And so you're able to slightly teach me that. For people listening out there who won't necessarily have met you before, Andy, like when you say my client, like what does that actually look like? What do they come to you for? From memory, you had a family management business that's been in the family for a generation. Is that still the business that you're running? And just teach us a bit about like what it is you're doing.
Yeah. So my firm, which is called Westcap Group, is a registered investment advisor, which means we are fiduciaries and we manage people's wealth. So that's one thing we do. And we do essentially full service financial planning as well. We do not give tax advice. So that's one thing that we don't do. But basically, if you have assets to invest, we will invest them for you and we'll do financial planning for you. And you're right that the firm was founded by my father and his founding partner, gosh, I want to say 36 years ago. And I joined the firm 12 and a half years ago. So yes, it's the family business. And also we manage money for families. And our typical client, we manage a few $1,000,000 for. There's a range around that, but basically that's the idea. And it's most asset classes, including alternatives. It kind of runs the gamut. And so generally speaking, people want to entrust their financial situation with us for the long run. And that's kind of how we operate.
Cool. And the long run is obviously the game, right? There's no point taking advice from someone who's making a quick buck. And so how have discussions developed with your average customer in regards to Bitcoin? So they obviously have heard of Bitcoin. Have you managed to get them to all have some kind of exposure to it? And when you help them with that, are people quite specific about, okay, now just take the ETF and a percent or two, or do they want to own it in self-custody?
Yeah. So the way this went was, just for my personal experience. So I was class of 2017. I rode the bull market up and crashed into the bear. And one of the reasons I wrote the book was to test my own thesis on Bitcoin and then also to put it in front of clients as my research justifying them owning it, right?
Yeah.
So
awesome.
the dynamic was, it may have been the day of publication or maybe the day after that I bought for them the Bitcoin Trust. Okay. And the conversation was, I've done the research, dear client. Yes, you think this is a flaming pile because it's just dumped from 20K to 3K. It's had a typical bear market downturn. But please read this and then let's talk about it. And so I immediately bought a tiny position. I don't remember what it was at the time, for everybody, or pretty much everybody. There may have been exceptions. There were very few who pushed back and said, no, I don't want to touch this thing. Basically reverse the trade. And then over time, we scaled in and bought more as we had conversations with clients. And at this point today, there are still a precious few clients that don't want to own it. And so we're essentially prohibited explicitly. But it's a core part of the client's portfolio. And then the set of clients that have actual outright coins rather than the ETF today is much, much smaller. Wow. That's that's, like I said, an ongoing education process. As you know from experience yourself, I mean, it's much more complicated, I would say, figuring out how to walk a client through the best way for them to own coins. The possibilities are not endless, but they're complex with respect to self-custody and collaborative custody and all the rest. So we're still really early in that game. And look, to be honest with you, I don't get too excited about the potential for personal liability associated with giving someone advice, right, on how to hold the keys, because if they screw it up, I worry a little bit about getting sued, to be honest with you.
And totally fair enough. It's one of the interesting nuances of the process. Like, okay, well, even if you understand that having Bitcoin in self-custody is the best way to own it because of the safety aspects to it, can you actually deliver on that? And when you're talking about, multiple figures, it starts to get really painful if you get it wrong. And more often than not, the mistakes are in-house. Like the chance of fire, the chance of theft, the chance of flooding, very, very small. The chance that you've lost the treasure map that you created for yourself, or that you made the treasure map too complicated and there's suddenly a passphrase on there that you're like, shit. One of my friends was like 11 o'clock at night, couldn't get into his Bitcoin, like in tears. You're like, I cannot believe I've got this so wrong. It was a funny story when he told it to me. But you're right.
I gotta ask. Did it work out okay?
Yeah, he figured it out.
All right.
Yeah.
Thank God.
Yeah. Touch wood. But you do hear these horror stories, and even for myself, like once I'd used a Bitcoin exchange in the UK. I was sending Bitcoin from the exchange to my own wallet, and it had left the account of the exchange but didn't turn up in the wallet, and I couldn't find it. And it transpired it was a public holiday because of a bank holiday in the UK, and the exchange operations team just hadn't come in and clicked the button because it was a certain quantity of Bitcoin. But like, talk about losing your wallet, it's like a couple of credit cards, maybe a bit of cash. Like this time around, you're like, oh my God, you idiot. What have you done? All the worst things cross your mind. So I'm with you that there's a problem there. What I'm intrigued about is, what are some of the better solutions then? So if you do make an allocation today for a client, are you giving them different options as to how to own it? Or do you just say, I think this is the best way?
Yeah, I mean, conversations happen, to be honest with you, the conversation's more along the lines of, I'm going to buy it in the ETF form, in your portfolio. Mm-hmm. And if you want to own it additionally, which you should, and by the way, it's a different dynamic. Some clients have come to me having already bought their Bitcoin position, and they're saying, okay, I got my self-custody piece, but I also want to own some normie fiat assets, so to speak. So that happens. And then the reverse is a conversation that I've been having that I hadn't had very often, but I'm having more frequently with time, is the, hey, basically I'm nudging people a little bit more firmly. You might want to consider actually being able to access your coins and self-custody, whether it's self-custody at the outset with single sig wallet or signing device, or whether it's collaborative custody, or whether it's a third-party custodian, multi-sig or not, but at least you can get the coins out, hopefully on short notice in future. I mean, you mentioned I can't remember which advantage you mentioned a moment ago about owning actual coins.
Well,
I
I
guess
was
the
talking
safety,
about
the
the
safety.
safety of it. It's like,
And there's also,
they're yours.
there's other.
That's it.
That's
End
right.
of
That's
story.
right. If they're custodied by you, your keys are your coins. But there's other advantages too. I mean, there's still a tax advantage, which is, I believe you could still, if you buy and price goes down, I believe you can sell and rebuy instantly, more or less, and realize the loss and take that loss, which is an asset. And then, of course, it's still early days, but the credit market for borrowing against actual coins, I still think that's likely to be more advantageous than the market for borrowing against paper Bitcoin, so to speak, like the ETFs or otherwise. It's still early days, so that statement is not true, but I'm still optimistic that we're going to get a properly functioning Bitcoin collateralized credit market that doesn't have high interest rates and can't liquidate you with tight stops. Essentially, we're not there yet, but I'm seeing things develop. So I guess I may have lost the thread here, but so all of these options, are discussed. Do you want to hold it yourself? Do you want to set up a multi-sig? Do you want to do collaborative custody where you've got control, or do you want to have a multi-sig solution with a third party, or do you just want to buy some coins on Coinbase or Swan or whoever? So all of the above are options, and frankly, that makes life harder, not easier, right? Because the right tailored solution for any person, whether they're a client or otherwise, could be different on a case-by-case basis.
The more you know, the more you buy. So your portfolio allocations are changing. But then equally, like, how you store your Bitcoin changes over time too. Because it needs to, frankly, if the percentage of your portfolio alters with it. It's like, well, you need to be absolutely fucking sure that if you were hit by a bus tomorrow, someone gets this stuff. And I'm someone who spent like countless hours thinking about that. And that's also because
me too, by the way.
Right? I came at this from a long-term wealth management perspective. It's like, how do I know that the next generation are going to get this in the best possible way if something was to go wrong?